What's good, YouTube? Sotirios here, back with another video on trading. This one was actually requested by my close friend Chase Kinser. Shout out my boy. Go check out his TikTok. He's going crazy on the TikTok. So go check it out. Link is in the description. But Chase is wondering how options work, what they are. And we're gonna jump right into that in this video. So here you see we have Amazon on the screen. We're not really gonna get into the charts, but Amazon does look very good for this coming week. And we're gonna just hop over here to the options tab, trade, and this is the options chain right here for Amazon. So what are options? Options are basically like a derivative of a stock, or of a share. So what it does is follow the share price. So I'm logged into Thinkorswim right now. This is through TD Ameritrade, and this is basically their options chain. This is for Amazon. So very expensive options, but basically an option gives you the option to buy 100 shares of the stock at the strike price. So this middle here are the strikes, and actually I'm going to take this over to Robinhood and show you on here. We're going to trade Tesla options, and so first you have to pick a expiry date. So basically all these dates listed on the options chain are all Fridays. So options always expire on Fridays, and you can go out all the way till 2024. So that's called a leap option, but we'll get into that here in a little bit. So let's say I wanted to look at Tesla for this coming week. It's Saturday right now, so the market's not open, and on Monday when it is open, we are able to trade these options. So February 4th, that's this coming Friday, at the end of the week, or end of next week, I should say. So if I wanted to go in here and bet that Tesla was going to go up to $900, which is this strike right here, as you see right here, it says strike price. The current share price of Tesla is at $852. But if I wanted to bet that it was going to go up to $900, I could buy this $900 option contract for this much. So this is not $12.33. You actually times this number by 100, giving you $1,233. So if I wanted to buy this, I can hit continue, and then I can put one contract or 10 contracts, however many you want to buy. And you put a limit price, or you can do a market order to get filled at the market. Market orders will get you filled like immediately, and limit orders might take some time, just because if I set a price for trying to get filled for $1,225, and the last traded option was at $1,233, I might get filled on this, because this limit price, there's a bid, which is $1,215, right? So that's $1,215 someone is looking to buy this for, and there's an ask. So this is the highest price that someone's looking to sell at $1,250. So you can try and gauge, I like to gauge if I'm doing a limit order, then I like to gauge somewhere toward the bid side of things. But if you're doing a market order, it's usually going to get you filled in between the bid and the ask. So in this case, it would be about $12.35 a contract, or it might even fill you on the ask, especially on a move up, since we're going for calls. Now, if the stock is moving down, let's say the stock was at $852, and at $850 I wanted to buy this $900 call option, this premium that you pay, the $1,200, would be less in value. So you might pay $1,050, so which would look like 10.05. Okay, that's $1,050. So yeah, you want to get in on the lower side of the option. Doing that's taken me almost 2.5 years to figure out how to even trade options correctly. But once I learned it, I know I'll never forget that. So let's talk about the strike price here. The strike price gives you the option to buy 100 shares of the underlying stock. So if you go in and trade an option like this one, this $900 Tesla call, by expiration, so by February the 4th, if Tesla is above $900, and actually what you have to do is, since you pay this premium in 1233, your break even is going to be 9/12/33. So if y'all are getting confused, it's okay. Just take a deep breath. There's a bunch of information on this online, but I'm going to try and describe it in my own words the best as I can. So on Friday, the February 4th, if your option, let's say the stock price of Tesla is at $915, then this $900 call, and on Friday close, so at 4 p.m. on Friday Eastern Standard Time, when the market closes and Tesla closes at 9:15, and you have this contract, then you are able to buy 100 shares of Tesla at $900 a piece, for all the shares. So I don't play like that. I don't add these shares, even if I'm in the money or something. I don't add the shares into my portfolio because this would cost $90,000, and that's just way too much money. So, but people do that. So these contracts above, you see this share price right here. The contracts above the share price. So if the share price is at 852, the 855 and up, all the way to 1,500 or so. 2,400. All these contracts above the share price are called out of the money options contracts, because they're not, Tesla's stock price has not exceeded these levels. Now, if Tesla's stock price was at $1,050, then everything below would be in the money, and everything above would be out of the money. So when you go back down to the 850, let's get rid of this. When you go down to 852 share price that Tesla is trading at, or what it closed at on Friday, everything below it, so 845, 800, these are in the money options contracts. So these are more expensive. So if you take this number and multiply it by 100, this is $6,000 you're spending to buy an $800 call expiring on Friday, February 4th. So the way I play options is I basically day trade them. People swing trade them, and people do like long-term investments, or what I mentioned earlier is the leaps. Basically meaning a leap is going far out a couple years on an options contract. So if I went to March 17th, 2023 on Tesla, these options are going to be very expensive because it's very probable that Tesla's stock price will go to these levels. So this is $20,000 you would spend on an 880 or a $900 call for Tesla expiring March 17th, 2023 would be going for about $20,000. So I don't day trade these contracts. They move a lot slower. So you see if Tesla went to 880, this contract value would be worth this. So what the 900 call is now is $20,000, and if Tesla went to 880 or to 890, this $900 call will be worth what this one is worth. Okay, so this is worth $20,100, and I believe that's right. If I'm reading this right, let me see. Yeah, $20,170, and this one is worth $20,708. So people buy leaps and they hold them in their accounts, and if you bought Tesla leaps 2 years ago, you would be sitting very pretty right now. But you never know. Tesla could keep going, and I'm sure it will. So, but I love trading the weekly options, the options that expire to the closest, the options with the closest expiry of the week I'm trading. So if it's Monday and I want to trade options, I'll trade the February 4th. And once that expires, then I'll trade the February 11th, and so on. I trade these weekly options because they move very quick. So you see here, if I don't know why these are having some trouble loading, but if I bought this $900 call for $1,235, and Tesla goes to 862, so instead of 852, it would go to 862, which would put this 860 strike in the money, right? So this green line here would be up here, okay, separating the 860 and the 865, because the share price theoretically would be at 862. This option contract $900 call will move from $1,233 to $1,350, basically netting overall profit of $120. But when Tesla moves $5, $10, $20, $30, $40, $50 a day, options contracts can move very quickly. So I also want to go into what theta is. So when you're playing options contracts, you need to know exactly what they are. So I'm going to tell you the two most important things to know. Okay, this theta right here, and these are called the Greeks. Okay, so there's theta and this delta. Okay, those are two things you really need to focus on when trading options. On my quick moves, when I'm taking 1 minute, 2 minute scalps, these things do not matter. And I play very close to the money, if not in the money, options contracts. So I'm not losing a lot of theta. And basically, theta is time decay. Okay, so on February 4th, let's say it's Monday and the market just opened, and I bought this contract for $1,235 a piece. Every day that this $900 call is out of the money, so not in the money like these ones, this will lose $221. Remember, times this number by 100, and it doesn't really matter that it's negative, but it's telling you that's what's going to happen. You'll lose money. So times 2.21 by 100 is $221. And basically, so every day that Tesla is not trading around these levels, let's say next week on Monday, Tesla just stays at 850, 860, between the 840 and the 860 range. Every day, so on Tuesday, if I had this $1,235 contract, the contract would lose $221. So basically, on Tuesday, this contract would be worth $1,000 if Tesla was around 850, around the same level it's at now. Let's talk about beta. And theta really, going back to theta really kills you when it's on Thursdays and Fridays. On Friday, since everything expires, like say it was February 4th today, these contracts would be going next to nothing because they're all worthless. The stock price isn't in that range. But that's where you can capitalize on moves and make, turn a couple dollars into a couple $100 per contract. But nothing's guaranteed, so you just got to follow the market and follow your gut. But I also want to talk about, other than theta, time decay. Just remember, this is the time decay. So if you're thinking of holding options, especially going out to the... Sorry, I keep bringing up theta again, but there is a lot to say on it because that's one thing I had a lot of trouble with when I started trading options. So if I go out January 20th, 2023 contracts on Tesla, so a year from now, and I look at buying a $1,000 call for $15,273, this contract has a theta of only $29 per day. Okay, so this $15,000 contract only loses $29 per day. But you also got to think that's pretty close to the money. I mean, it's about $150 away. But it's a whole year out. Okay, so the longer the time frame you have on a contract, the less theta there's going to be. Now, when this January 20th, 2023 gets here to July 15th, like let's say 6 months pass, and I'm still holding the $1,000 call, instead of $15,000, this one is worth $8,500. So let's say for 6 months straight, Tesla share price traded at $852. My January 2023 contract, $1,000 call, would only be worth $8,500. So if I spent $15,000, now I have $8,500. It's a $7,000, $6,500 loss. And as you see here, from the time of this recording, July 15th, it's about 7 months out, 6 months out. The theta on these contracts are $40. So instead of 29, it's 40. So time decay is starting to ramp up. And let me show you a quick Google image of this time decay. So this is percent of premium remaining, so 0 to 100%. And premium is the amount of money you pay to buy the contract. So in this case, the $1,000 call for July 15th would be $8,500. So that's premium. So this down here is the months to expire. So if I'm looking 9 months out to buy a contract, this premium will be around 100 to 90%. Okay, no matter really what the stock does, unless it goes down like a couple $100 very quickly, this premium will stay pretty high up. If the share price keeps trading in a range, let's say 800, the Tesla example, let's say $800 to $900. Okay. So this is a 6 to 9 month period if you're looking to buy that far out. But you also have to remember these contracts do not move as fast. If Tesla moves $25, this $8,500 contract that I just paid for will only be worth $9,200. So not even making $1,000 on this contract. Okay, but on the weekly contracts, those things can move. Boy, I'm telling you, a couple thousand, a couple $100 a day. So 6 to 3 months, you have a range of 90% premium being the very top and 60% premium being the bottom. 3 to 0 months to expire. So basically, if you're playing weekly call options, that would be down here. So that has a range of about 0 to 10%. And everything else 3 months out, can go up significantly higher levels. But you can see the curve as it comes down. So if you buy a contract a year out over here at 100% premium and you hold it for the whole year, and the stock price does not go to your strike price or exceeds your strike price, this is what your option contract will do. Okay, it just plummet. And so that's basically theta, and you just have to remember to times this theta number by 100 and see. So if you go into the weekly call options, February 4th, let's say we're looking at the $900 call. Theta is $221. That's a lot of money. At the money, let's say the 860 call is $266 on $2,500, opposed to $221 loss on a $1,200 contract. You go up here to let's say you wanted to buy a weekly $1,000 call on Tesla because it's only worth $200 to buy one. Well, the theta in here is $84, and $84 of 200 is almost 50%. You don't want to touch these. You do not want to touch far out of the money contracts, and this is where we get into delta. This is the second and most important thing besides theta that you need to learn. So delta is the amount of dollars. So in this case, 0.26. So you times 0.26 by 100, and that number would be $26. So every dollar that Tesla moves, okay, so if it's at 852 let's say if it goes to 853 and it's Monday and I just bought this 1235 call, or I'm sorry, the $900 call at $1,235, and Tesla goes from 852 to 853, this contract will move $26 up. Okay. Now, if Tesla goes from 852 to 850, that's a $2 move. This contract will lose about $50. Okay. So this is delta and theta are what you really need to remember when trading options. So exactly how do options move? It's basically, let me go back here. Options move with the share price of Tesla. So this was on Friday. Tesla was at $800. Then it shot up to $850. Okay, these contracts moved, and I'll show you. If we go into Thinkorswim, this is why I love this platform, Thinkorswim. If I type in Tesla up here and pull up the options contract, and I go into February 4th, and I go to the 850 call, I'm going to copy this. I'm going to go here to my chart. I'm going to paste this. Ooh. And I'm going to enter. Okay. So this is on Friday when Tesla share price was at $800. This contract was at $2,000. Okay, so let's say I wanted to buy this contract, and this was the, which contract was this? The 850 call. Okay, so this is expensive because it wasn't the same week expiry when the market just closed on Friday. This is this coming week's. So if I wanted to buy this 850 call expiring February 4th, I would have spent about $2,000 to about $1,900 to $2,200. Okay, but when Tesla went to $850, this contract went up here to about $4,000. Okay, it had a high of about what is this high? $4,080. So that's 100% move in one day. Literally from 10 o'clock in the morning to about 1 hour later, 11. So you could have turned $2,000 into $4,000. Okay? Because Tesla, the share price of Tesla, let me go back here, moved from 800 to 850. Okay? So there's day trading options, which I do, just quick scalps. So I might buy here at 801 and I might trade the 805 call strike, right? And if it goes to 807, my call is in the money and I'm making money. So I'm happy. Let's say you want to buy a contract here at 846, betting that Tesla's going to go to $900, which it didn't, right? But you didn't know that at the time, so you bought the contract. The share price went all the way back down to $815. So let's see if we bought that same contract, the 850 call, at 12:45 p.m. And let's look at the price from 12:45 p.m. to 2:45 p.m. Let's find 12:45 right here. So if we bought it here, $3,200 we spent on one contract, and at 2:45 p.m., right about here, then we would turn this $3,200 into about $2,000. So losing about $1,200 if you sell it. Okay, there's always that if. So let me go back here. There's also swing trading options, and if you want to swing trade, basically what that means is holding the contract for X amount of days, whether that's 2, whether that's 5 or 10 days, maybe 2 weeks, 4 weeks. You're just looking to get a move. So if I was playing puts, right, puts are to the downside and calls are to the upside. If I was playing puts on Tesla here at $863, and this was on Thursday's action, and then on Friday morning I woke up with Tesla at 805, you could get out of your position and make probably 200% profit, maybe even more. And then there's long-term investing in options, which are called leaps, like I said, like a couple years out contracts. But the week of expiration, and if it was Monday and I'm trading the February 4th contracts, then these are going to move the fastest for me. Okay. And this is what I want to capitalize on as a day trader to make money. Now, if you're doing swing options, I really recommend going out. You might think about 2 weeks out, or maybe 3 weeks or 4 weeks out. No, I would probably go out, 2 to 3 to 4 months out, because you don't know, you might end up holding longer than you wanted to. But that's all up to you. Every trader is different, and I can't control what people do when it comes to that, but I can tell you what I've learned. Let's see. So yeah, I wanted to also talk about how can you profit from options, because you can buy $1,000 call on Tesla expiring this coming week for $202, and when Tesla moves $5, your contract will be worth $213, and when Tesla moves $50, your contract will be worth $500, right? So over 100% gain. Don't hold your contracts, especially if they're of the same week expiry. Don't hold those contracts thinking you're going to get a 5, 10, 20x move on your investment. It's not going to happen, okay? And it might, but it's not going to happen. But I have seen it happen, and it just rarely happens. So I just don't want people losing money going in and buying $1,500 calls on Tesla because they're worth $1 or $4 a contract, and I don't want you buying 1,000 of these contracts for $4,000. No, we don't want that, or 400, whatever it is, because it's not going to move, especially this coming week. So go out, if you want to trade June, that's 6 months away. You want to buy a $1,500 call on Tesla, I could understand that. That's $1,200 a contract, and it might move. You never know with Elon. So that's basically it, guys. I also want to talk about, I know I focus mainly on Tesla on this, but I also want to go into show you like Ford stock. This stock it was up here at $25, and now it's down here at $19.50. So this is what levels do, by the way. I'll explain more of the supply and demand zone in later videos, but this is what your levels do. So basically, once it comes into a red zone, you want to take it short. Now, Ford hasn't moved for years on years. This is the weekly chart. Every candle is 1 week. Okay, so back in 1998, when I was born, Ford was at $34 to $38 a share. Okay, in 2018, Ford actually came down to $1 a share. Now, if you bought this top up here in 1998, 1999, you lost all your money if you sold, right? My dad actually bought shares back at, I don't even know. I think he had an average around this level here. I think he bought it back in 2001. So he had about an average of $17 to $18 a share, and he had to hold for 20 years. 20 years to be break even. Okay? I don't have anything to say about that. I have a lot to say about that, but my dad's not a day trader like me, and he likes long-term investing, which is fine. Okay, when you look at Tesla's chart from 2-3 years ago, $50 to $1,200. So, yeah, it is what it is. But if you go into a company like Ford, let me pull this back up on Robinhood. If you go into a company like Ford and you trade Ford options and you look at, let's say, this coming Friday, these things are cheap, guys. This is where you can make your money. If you don't have $1,200, $1,500, $2,500 to spend on Tesla contracts, this is what you play until you get that money to trade bigger names like Amazon, Tesla, Spotify, Shopify, etc. You want to bet that Ford's going to go to $21 by February 4th and Ford goes to $20.50? Well, this is in the money, and your $21 strike is next to be in the money. So let's say this jumped from here to up here. Your contract would jump to, yeah. Your contract would be, if you bought this at $29 a piece, your contract, and Ford went up, let's say $1, right? We can go in here, look at the delta. So now your $29 investment will be worth $25 more. So almost 100% more. So if you go in and buy 10 of these contracts for $290, you can turn $290 into what? $600? Okay? And make a $300 profit? That sounds good to me. So if you don't have a lot of money, if you've got $1,000 in the Robinhood or whatever account you're using, just go for these shorter dated, but get closer to the money. And this is one thing I want to explain about Delta is I don't trade any Delta. I don't trade any contract with a Delta lower than 30. Okay? And I learned that from another YouTuber that taught me the supply and demand imbalances, but it just doesn't, it keeps you safe. I'm going to tell you that. It keeps you safe. So if I want to go up here and buy a $25 call for $3 a piece, the delta is only $3, okay? But this could move, right? But you have to look at the $24.50 call. That one's going for $3 a piece. The $24 call is only going for $4 a piece. So the stock really has to move. And it's not likely. Don't play these out of the money, 3-cent deltas, only a $3 move deltas. You want something with 0.30 or higher. So this 2050 call has a 0.33 delta. This is what you could buy. Okay, for $43 a contract, you could buy the $2050 call expiring February 4th. And if Ford goes to 2050, which it might, because let me look at the chart real quick. Yeah, I mean, it might, right? It might not, but it might. I personally think it's probably going to come down below here, but if it holds this level in this zone, which it bounced around previously until it found buyers on this move up, it could create demand and push up some more. But from these red zones, I don't trust that, and I would play puts to the downside. So if we went and looked at puts, and this is what you do. You never want to sell. Don't sell a call or a put. Don't click this on Robinhood if this is what you're using. You're always going to buy. Okay? You're going to buy a call betting that the stock is going to go up, or you're going to buy a put betting that the stock is going to go down. Okay? So this is basically the options overview and how options move and what you really need to look for. Remember the theta and remember the delta. Multiply these numbers by 100, $140, $107, yada, yada, yada. Hope y'all enjoyed the video. Chase, thank you for commenting and recommending me do this video to help you learn. And I hope you learned something. This was all like a live recording, so I may have, said too many times and try to figure out what I'm trying to say, but this is what I basically want you to learn is don't buy far out of the money contracts. If anything, you could buy in the money contract and let it ride, but these get more expensive, okay? Or I'm sorry, these are puts. Let's go to calls. These get more expensive out of the in the money, right? Because they have value. They're worth something. Because $17, if I want to go in and buy a $15 strike on Ford, which I'm sure it's going to close above $15 this coming Friday, then you'll have the right. But this contract is $455. Okay, so you buy one contract for $455, and on Friday the stock price closes at $18. Well, you're not going to be able to buy your shares because your break even is at $19.55. So basically, what the stock is now. So to buy this option and then to use that option to buy shares at this price, Ford's going to need to close above 1960 or 1955 on Friday. And you're going to have $1,500 in your account because 15 times 100 shares, because options give you the right to buy 100 shares at the strike price. You need $1,500 in your account on close on the close on Friday to be able to buy those shares. But that's it. I mean, it's basic. If you get a move to the upside and you want to sell you want to buy contracts, buy them and sell them on your move up. Okay, the market doesn't go up forever, and if you look at the 5-year chart on Ford, it looks like it might, but I promise you it does not. So hope you all enjoyed the video. If you're new, hit the subscribe button. Check out the links down below. I got Chase's Instagram. I got his TikTok. Go support him. Go give him a follow. And let's all make some money together. I appreciate y'all watching. Hope y'all have a good rest of your day or night. And we'll see you in the next one.